Okay, let's start with some basics and see what it knows about investing. So let's see, what is investing? Boom. Typo there, but it'll know. Investing is the act of allocating resources, usually money, to purchase assets with the expectation of generating income or capital appreciation. That's a very good definition. The goal of investing is to put money to work in order to generate a return. Very good. Common investment values include stocks, bonds, real estate, mutual fund, exchange traded funds, which is ETFs, and commodities. The objective of investing is to grow wealth. Okay. What is the best way to invest? Let's see if it tells us stocks or now or real estate. There is no one fits all approach. It's all answer. To what the best way to invest? Start early. Look at this. Like again, the answers that it gives is really really nice. I wanted to ask when should we start investing, but it pretty much answered that right here. So start early. The earlier you start investing, the more time your money has to grow. Very good. Diversify your portfolio. Don't put all your eggs in one basket. Again, very good advice. Invest in low cost index funds. So that's what it's recommending, which is pretty much the kind of number one recommendation and out there. So index funds have a long term perspective. That's very good as well. Stay informed. Keep up with the financial news and advise yourself about the different investment options. That's what we're trying to do here with you. It's important to put the investing always on some degree of risk. Yes, that is correct. It's good to have a financial advisor, okay? You are our financial advisor, ChatGPT. So, um, is it good to invest in stocks? Let's go this route. Investing in stocks can be a good way to grow wealth over long term. Historically, stocks have proven higher returns compared to other investments such as bonds, but they also come with higher volatility and risk. Potential to higher returns is the fast stock statement. Ownership in a company and company grows. The value of stocks is however, it keep in mind that the stock market can be affected by a variety of factors such as economic conditions, company specific. Okay, if you're investing in stocks, it's important to have a well diversified portfolio. So that is pushing pretty much for index investing. We're going to ask it in a different topic what it thinks. Okay, let's see strategies. What are some investing strategies? And see if it knows like value investing or growth investing, things of that nature. There are many different investment strategies, each with its own unique. There we go. So it knows everything. We just need to ask the correct questions. Value investing. The goal of value investing is to buy stocks that are undervalued by the market with the expectations that the market will eventually recognize their value. Growth investing focuses on investing in companies that are strong potential for growth. Dividend investing. Okay, so we can make different topics on pretty much all of these. Okay, stop, please. So dividend investing. Well, I pretty much think we can ask it for recommendations on all of these. Index investing means diversified portfolio. Dollar cost averaging. This is a very important thing to note. I don't know if we should make a separate topic, so let's answer it here. So dollar cost averaging involves investing a set of amount of money regularly, regardless of the market conditions. This helps to average out the cost of purchasing. So let me kind of elaborate on this really quick. What it means is, let's say Tesla stock was at 250 last year, right? It was even at 300. So you purchase a stock at $300, let's say 100 shares. Then it goes to 250. You then buy another 100 shares. Then it goes down to 200. You buy another 100 shares. It goes to 150. You buy another 100 shares. And especially dollar cost averaging is when the stock goes down. So you don't regularly do dollar cost averaging when stocks go up, right? You're just enjoying the gains. Although that's a good strategy as well, but most of the time when this strategy is implemented is when stocks are going down. So let's say with two time frames, you buy a stock when it was $300, you bought 100 shares, and then you bought another 100 shares when it was $200. So now you have 200 shares. Uh, your total cost basis is 250. 300 plus 200 divided by 2. And that's why this strategy is called dollar cost averaging. But in normally also kind of here says that you can do that by just pretty much regularly investing and not caring what the price is. So you're gonna, although I disagree with that assessment, I don't think you should do that, because that way you might be buying at very high, very high uh, entry points. So definitely what it said before, like having some investing knowledge, and that's pretty much what we are doing here, kind of educating ourselves on the markets. I think I support that approach. I don't think that you just should regularly, every first of the month, buy some stocks, because with a little bit more educated entries, I think you can significantly improve the performance that you have. Again, not timing the market specifically, but not doing just blindly doing it on the first of the month. That's what this thing here is. So, what is dollar cost averaging? With kind of lowering your cost basis, but not doing this regularly. Think, okay, momentum investing. Momentum investing involving in stocks or other assets that have been performing very recently, with the expectation that the upward trend will continue. So this is also kind of picking up on the meme stock craze, or let's say, let's not talk about the meme stocks, but those are pretty much case examples of the momentum, where people say it was $2, now it's $10, so it's going to go to 20, so I'm going to buy it at 10. But most of the time, momentum trades don't end well. So that's why you shouldn't do that in those meme stocks. But where momentum trading, investing, sorry, does pay out is, let's say, a stock like Tesla. So those are more on the speculative end. But regardless, that's not a meme stock, right? That is a stock that you can say it's value or growth, whatever you agree or disagree, but it's definitely one momentum moving stock. So when it was down, as I said, it was going down from 300 to 250 to 200 to 150. And all those times, if you were trying to do this, which was dollar cost averaging, you were just hemorrhaging money, because the stock was going downhill. But now, and then it bottoms. So instead of doing that, you wait for it to bottom and then you do the momentum trade. So many people were doing momentum trading on Tesla by shorting it all that time. I don't know if for beginners you shouldn't be probably shorting stocks because it's highly risky, but that's what was happening. And then when it bottomed earlier in 2023 at 103, and then it started going higher, that's when the momentum shifted, and pretty much it's up now, what, 80-85% during the month of January and the beginning of February. So that's what a momentum investing is. You see that the momentum shifted, it went from 103 to 110 to 120 to 130, and then you get in for because the price is now going higher and the momentum is higher. So I would say that that is a momentum investing. Going in meme stocks, that's trading. And we're going to have a topic here. Let's do the next topic as for trading purposes and see what it says about stock trading. But keep in mind that there's a very big difference between trading and investing. So momentum investing here, definitely keep in mind stocks that do have some value and are momentum driven, but not the pretty much no value stocks, which are the meme stocks. Okay, so let's do, I think that's pretty good answers for this topic, for the basics. Let me go one by one on these kind of strategies, see what it comes up, and then we're going to go to trading. Okay, see you in the next one.